Opendoor just closed out Friday's session, and the week, with a bit of a pullback. Shares of Open finished the day at $9.07, down $1.35, or about 13.8%. On the surface, that might sound dramatic. But in the context of everything that happened this week, it's really not surprising at all. Remember, on Thursday the stock absolutely exploded. Opendoor surged nearly 80% in a single day, closing at $10.52 after gaining $4.66. That was one of the biggest one-day moves we've seen for any stock this year. And whenever you get a move like that, there's almost always going to be some profit taking the following day. Traders who doubled their money in less than 24 hours are going to lock in gains. Funds that were caught off guard are going to rebalance. And the chart itself needs time to breathe. So Friday's dip isn't a sign of weakness. It's a sign of consolidation. It's the market taking a pause after a parabolic run, finding a new floor, and setting the stage for the next leg higher. Stocks don't go to $50 or $82 overnight. They move in waves. They surge, they consolidate, and then they surge again. That's how real rallies are built. And that's exactly what's happening with Opendoor right now. Let's break it down. Thursday's rally was fueled by a massive shift in leadership and governance. Consolidation, the former COO of Shopify, has stepped in as Opendoor's new CEO. Keith Rabois, one of the company's co-founders, is back as chairman of the board. Eric Wu, another co-founder, has rejoined the board as well. And together with Khosla Ventures, Wu has invested $40 million in new equity capital to back the company's next phase. That leadership reset lit a fire under the stock. Retail investors, the Open Army, saw it as validation of the thesis they've been pounding the table on for months. Activist Eric Jackson called it out just last week in New York. If Opendoor got its board reform right, this could easily be a $50 stock. And now, with the reform accomplished, that thesis is starting to feel a lot more real. So after an 80% surge, Friday's pullback was predictable. And frankly, it was healthy. Because what we're seeing now is the stock starting to carve out a new floor. Before this week, Opendoor was trading in the $5 to $6 range. After Thursday, it was firmly in double digits. Now, after Friday's sell-off, it's holding just above $9. That's a huge shift in base. The market is telling us that the old range is gone. A new range is forming. And that's the platform from which the next rally can launch. But here's where things get even more interesting. While the stock was consolidating, the story was still moving forward. Because Eric Jackson, the man at the center of the Open Army's activist push, has been on an absolute media blitz. Over the past couple of days, he's been in New York, promoting Opendoor to the masses. He's been on Yahoo Finance. He's called into Fox News. And he even appeared at Anthony Pompliano's sold-out investor summit to talk about the company. Everywhere you look, Jackson is pushing the message: Opendoor is not just another housing stock. It's a transformational platform. It's the Amazon of real estate. And with the right leadership in place, it's on a path to $50 and beyond. This media blitz matters for a couple of reasons. First, it broadens the audience. Up until now, a lot of the Open Army's energy has been concentrated in retail communities online, on X, on YouTube, in trading forums. But when Jackson goes on Yahoo Finance, he's reaching a mainstream investor audience. When he calls into Fox News, he's hitting millions of viewers who may not even be following the stock closely yet. When he speaks at Pompliano Summit, he's connecting with serious investors who are looking for conviction plays. Second, it legitimizes the movement. For weeks, critics have dismissed the Open Army as just another meme crowd, lumping it in with short-term hype plays. But Jackson's campaign has always been about more than that. It's been about conviction, about vision, and about forcing real change at the board level. And now, with that change accomplished, his media appearances are reinforcing that message to a broader audience. This isn't a meme. This is a movement. And third, it adds cultural weight. One of the more entertaining nuggets to come out of this week is that someone in Drake's team has apparently been watching and liking Jackson's video updates. Now, does that mean Drake himself is about to buy shares of Open? Probably not. But it does show that the stunt of camping outside Drake's house for 22 days wasn't wasted. It captured attention. It created a hook. And now, that cultural crossover is part of the story. The Open Army isn't just about stock charts, it's about energy, visibility, and momentum. So when you put it all together, Friday's pullback looks less like a setback and more like a setup. On the chart, the stock is consolidating after an 80% move. In the narrative, the message is being amplified to new audiences through Jackson's media blitz. And in the fundamentals, the company is entering a new phase of leadership and vision with Consolidation, Keith Rabois, and Eric Wu at the helm. Now, let's talk about what comes next. Because as exciting as this week has been, the path to $50 or $82 isn't a straight line. It's going to take time, patience, and catalysts. The next big one on the horizon is the Federal Reserve's interest rate decision next week. If the Fed cuts rates, as many expect, that's a tailwind for the entire housing sector. Lower mortgage costs mean more affordability, more transactions, and more volume for Opendoor's platform. Combine that with the leadership reset and retail conviction, and you've got a powerful recipe for momentum. Then there's the short squeeze dynamic. As of last week, nearly a quarter of the float, about 155 million shares, was sold short. Those shorts were betting on weak leadership, poor governance, and continued uncertainty. But now, with founder DNA restored and conviction rising, those shorts are in a tough spot. Thursday's rally put them on notice. Friday's consolidation didn't ease the pressure, it just delayed it. If momentum picks up again, shorts may be forced to cover in waves, fueling another surge higher. And finally, there's the cultural angle. With Jackson's media blitz, Pompliano summit, and even Drake's team watching, the Open Army is no longer just a retail community. It's becoming a cultural movement. And in today's market, where narrative often drives capital, that matters. It builds momentum. It attracts attention. And it fuels conviction. So what's the bottom line? Friday's sell-off isn't weakness. It's consolidation. It's the stock finding a new floor after a parabolic run. And it's setting the stage for the next move. Meanwhile, Eric Jackson is broadening the audience, legitimizing the movement, and adding cultural fuel to the fire. The leadership reset is real. The conviction is strong. And the catalysts are still ahead. If you're an Open Army believer, Friday should give you confidence, not fear. Because this is how real rallies are built. Not in a straight line, but in waves. Thursday was the surge. Friday was the consolidation. And the next surge could be right around the corner. Eric Jackson said $50 was possible with the right board reform. That reform is now in place. The path is open. And while it won't happen overnight, the story is moving in that direction. So don't get distracted by the day-to-day noise. Focus on the bigger picture. Focus on the transformation. Focus on the conviction. Because that's what's going to carry this stock higher over time.